You've probably heard of or done some research on a limited liability partnership, also known as an LLP, but are not yet sure whether this legal structure is right for you and your business. So if you need to do or are here to do a little more research, then stay tuned. In this video, we will cover what exactly is a limited liability partnership, how is an LLP taxed in the UK, 5 key attractions of using an LLP over a limited company, and finally, which is right for your business, an LLP or limited company. Before we get started, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you free quality advice from real qualified accountants. A limited liability partnership, or LLP, is a type of corporate body that is created and registered at Companies House, similar to a traditional limited company. It's a relatively new concept as it was first introduced in 2001 under the Limited Liability Partnership Act of 2000. Now, it has proven very popular with professional businesses such as accountancy practices, solicitors, and investment managers. The general idea of an LLP is that it combines some of the key features of a limited company with those of a traditional partnership. A LLP must have at least 2 members, and there is no upper limit on this. It also is possible for a traditional limited company to be a member of an LLP. Where this is the case, they are known as corporate members. A LLP is a separate legal body from its members, much like a traditional limited company is from its shareholders, and as a result offers its members limited liability. Profits made by the business are distributed to members. The exact split is detailed in the members' agreement, which is a private document that lays out all the key details regarding the LLP. As the name suggests, the LLP offers its members limited liability, and the LLP itself is considered a separate legal entity to its members, and as such the members are only liable for a predetermined amount, which should be detailed in the LLP's members agreement. If the LLP was to ever run into financial difficulty, then the members' personal assets will be somewhat secure compared to those operating via the traditional partnership route, where the partners are personally liable for the partnership debts and any legal claims made against it. This is why you will see many professional firms, such as accountancy and law practices, now operating under an LLP structure so that partners enjoy a degree of protection from both legal action and the misconduct of other partners in the firm. Before we continue with today's video, we're thrilled to be launching the Accounting and Tax Academy membership site early next year. We'll be posting downloadable resources, tax tutorials, and in-depth courses that you can't access anywhere else. And the best part is it's absolutely free to join. Head to the link in the description box below and register your interest today. An LLP is described as tax transparent. Well, what does this actually mean? Let me explain with an example. ABC LLP is a limited liability partnership, and to the year to 31st of March, the company made £90,000 in profits before tax. The LLP has 3 equal individual members. So each member will take a 1/3 share in the profits, in this case, £30,000 each. Unlike a traditional limited company, there is no corporation tax to pay on the profits. The members each receive their share of the profits and are liable to pay income tax and self-employed Class 2 and Class 4 national insurance on their split of these profits. This is the same tax regime as a traditional partnership and has to be declared in each individual member's self-assessment return. The LLP itself has to prepare annual accounts and what is known as an LLP partnership tax return and submit these to Companies House and HMRC respectively every year. So you may be thinking, why would you even consider an LLP over a traditional limited company or even a partnership structure? After all, a traditional limited company is very common. Well, here's 5 reasons why an LLP could be attractive to you. Number 1, a member of an LLP is protected against negligence or misconduct from another member of the LLP. Now, this is a key advantage over a traditional limited company and is a reason why LLPs have proven to be so popular amongst professional services businesses such as law firms. Number 2, a corporate entity such as a traditional limited company can also be a member of the LLP. Now, done properly, this allows for greater control and tax planning opportunities. Number 3, traditional limited companies have shareholders and it's not so easy to add and remove shareholders. In contrast, members can be easily added or removed from the LLP, allowing for agility and greater flexibility. Number 4, there are no taxable benefits in kind on individual members, so there's no requirement for a P11D. Any non-business element of expenses is added back to taxable profits. And number 5, an LLP is considered to give its members a greater degree of privacy compared to that offered to shareholders in a limited company. The limited company's articles of association are on public record at Companies House, with details such as share splits available for all to see. The LLP will detail profit splits in its members' agreement, which is not filed at Companies House and not on public record. There is no simple answer to this particular question, as there's definitely no standard fit. Your situation, circumstances and objectives all need to be considered before you can make an informed decision. And that is the key, making an informed decision. And to help you do this, we've done a free decision aid tool that will help you think about and plan through some of the questions you may have and should ask yourself before deciding upon which structure to use. Click on the link on the description box below to download this. I hope this video has helped you learn some of the basics of a limited liability partnership and taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video, or if there are any topics you'd like to see us cover in the future. Finally, be sure to like and subscribe, as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.